Ask an advisor. I'm 77 and still working. Is it true that I don't have to take RMDs? Smart asset. I'm 77 years old and I requested my 401k fund administrator to prepare my RMD. I was told I do not have to withdraw my money if I am still employed. Please confirm if this in fact an IRS rule or that of the fund management company. B. That is correct. B. If you are the post, ask an advisor. I'm 77 and still working. Is it true that I don't have to take RMDs? Appeared first on Smart Reads by Smart Asset. Below are your comments. Brandon, there are a couple of additional things you should have touched on for B, and I'm assuming GB is a she and short for Beatrice. The age 77 thing is way past current RMD ages. She probably isn't a 5% or more owner, but she might be, such as a doctor in private practice, which meant you don't need a financial advisor's services to roll a 401k from past employer to your current employer's 401k. Just call your current 401k customer service and tell them you have a 401k from a prior employment. ND want to roll that into your current 401k, aka active 401k. They will give you Inster. Your financial institution will notify you if you are required to take an RMD and the amount of the RMD. Mine does. I would have been dead if I stayed in my job until 65, let alone at 77. I got out when I had enough saved in 401k and 401k Roth IRA. I roll over to Vanguard where I have a taxable account to make my retirement simpler. Work is just that, work. If work was enjoyable, it would be called hobby. My closest friend entrusted me with $100,000 in $100 bills. I was asked to put in envelope and drop in casket upon his death. I did him one better and wrote a personal check for $120,000 and placed in casket. Next news. Ask an advisor. I'm 5 years away from RMDs but recently lost 30% of my 401k. Should I stay aggressive to regain my losses or rebalance? Smart asset. When I retired in September 2022, my 401k was invested aggressively, 90/10 split between stocks to bonds, and lost approximately 30%. I left the 401k invested in mutual funds in hopes it would gain back some of the losses. A year later it has gained back approximately 20%. I'm not required to take RMDs for the post, ask an advisor. I'm 5 years away from RMDs but recently lost 30% of my 401k. Should I stay aggressive to regain my losses or rebalance? Appeared first on Smart Reads by Smart. Below are your comments. Roll over to IRA to avoid the admin fees that many 401k hides somewhere. You can invest mutual funds in IRA if you like what you have in your 401k. You don't have to have financial advisor to manage the IRA account. Before RMD hits, you could consider converting some of the IRA to Roth through the 5. I had a similar experience. I was 45 minutes away from lunchtime. I had a coupon for a Big Mac but couldn't find it. So I drove to McDonald's and saw that they had a special on the app for a quarter pounder with a Drin K. But then I found the Big Mac coupon. Man, did I have to do some quick thinking. Consider switching some or all of your 401k into a Roth account. Pay the taxes and hope the account recovers. We did that several years back when the market fell due to COVID. We paid the taxes, but since then the account has almost doubled. And that is tax-free money available after 5 years. Do nothing. Stay the course and put it all in S&P fund with low fees. Over time you will outpace the market, aka Jack Bogle, founder of Vanguard. Next news. Ask an advisor. I am 60 years old, have $1.1 million cash, $880,000 in a 401k, several pensions and Social Security. Should I retire now? Smart Asset. I am 60 years old, married, with no mortgage. We also have $1.1 million in liquid cash and $880,000 in a 401k. I will have 2 pensions, which have not started yet, and my wife will have 1 pension, all. Continue reading right pointing arrow the post. Ask an advisor. I am 60 years old, have $1.1 million cash, $880,000 in a 401k, several pensions and Social Security. Should I retire now? Appeared first on Smart Asset blog. Below are your comments. How do people accumulate so much wealth and can't do simple math to figure out if they can retire? If you spend more than you will make, you can't retire. It is not rocket science. Lower your costs or keep working. $94 million in cash, 7 pensions that will total about $1 million per year plus Social Security and another $12. 6 meters in my 401k. I figure with interest plus pensions plus SSI will have about $1.5 million. I do have a mortgage with almost $8,000 left that costs me around $200 per month. Can I retire? By the way, I am 75 years old. So basically $2 million plus $8,500 per month in pensions and Social Security plus medical, dental coverage for life. Can we get some real-world scenarios here, where it's not obvious that the asker can retire? I'm an 84-year-old bricklayer with $15 million in IRAs and 6 pensions. Between the pensions and my Social Security, I have about $20K per month. House is paid for, but I have a $200 monthly car payment. Should I wait to retire until the car is paid off? I am 20 years old with $10 million in stock investment. Plus $10,000 from monthly passive income from $2 million property investment. I also have Sugar Daddy's $50,000 monthly allowance. Should I retire? Next news. How Roth IRA contributions are taxed. Smart asset. Roth IRAs offer a tax-advantaged way to save for retirement, and they're a popular choice among investors. However, understanding how Roth IRA contributions are taxed is crucial for making informed financial decisions. Let's break down the marginal tax rate, compare Roth IRAs to traditional IRAs, delve into the taxation of Roth IRA contributions and examine the post How Roth IRA contributions are taxed appeared first on Smart Reads by Smart Asset. Below are your comments. Hopefully Roth IRA accounts are not changed and never taxed. Deposit after tax monies. Wait till you're 59 and a half as long as you have had the account for 5 years and never pay taxes on withdrawals ever again. Peter Thiel is the best Roth success story out there. $5 billion tax-free, and that should end. The greatest advantage is even when taxes are raised, the growth of a Roth is tax-exempt, whereas a regular IRA you pay taxes at the current rates. That means if when you contribute at the rate of your present rate and taxes go up, you will be taxed at a higher rate. I am retired, under 60 YO. My spouse, who is much younger than I am, is still working. We are married and file our taxes jointly. Can she make a spousal contribution to both her and my Roth IRA if we are under the limit since she is still working? There are no special rules for taxing Roth contributions. They are funded from after-tax dollars. You can't have a conversation about Roth IRA's limits without mentioning that those limits don't apply to Roth 401 kiloseconds. The fact that the writer left that out makes me think they are a novice. Next news. Retired and feeling pinched by smaller Social Security payments? You're not alone. Smart Asset. If America is seeing a significant uptick in the number of grumpy old men and women, one reason might well be the big shortfall during 2022 between inflation and their Social Security payments. According to the nonpartisan senior. Continue reading right-pointing arrow. The post Why are retirees feeling pinched? Social Security fell this much short last year appeared first on Smart Asset blog. Below are your comments. I have not noticed much change. Although, with the massive increase in restaurant prices, tax and tip, I refuse to pay the prices for lesser quality food and service. That saves me about $8,000 a year and only costs me $2,000 more in groceries. I also cut the cord on satellite TV and the landline. Stop taxing Social Security benefits. The tax on Social Security was instituted in 1983, long before the Tax Reform Act was even considered. Claiming that Reagan imposed the tax on Social Security benefits ignores that it was a widespread bipartisan effort, passed easily and quickly with overwhelming. Far too many did not prepare for retirement. They focused on accumulating money but not on reducing expenses. I had my retirement home built when I was 57. I'm 70 and it has been a good decision. My living costs are still manageable, even though it is getting scary out there. Oh, and you don't. Misleading headline. The checks are significantly larger, not smaller. The problem is that inflation has surged quite a bit and much higher in certain sectors than the avenue rage rate. Next news. Bond market's dramatic recovery is seen as opening act for broader revival. Bloomberg. The world's biggest bond market has clawed its way back after spending chunks of 2023 underwater. Now many U.S. debt watchers see the pathway clearing for a real revival. Most read from Bloomberg. Russia downs drones over Moscow in Ukrainian retaliatory strike. China says multiple pathogens are behind spike in respiratory illnesses. Sodium in batteries shift may herald another shakeup. Markets cheer as Malay drops dollarization for Macri. Brass. Israel, Hamas look to extend truce after more Below are your comments. If you're an investor diving into today's market, relying solely on trustworthy news is make or break. I learned this the hard way. It took a toll on my portfolio. That's when I turned to professional guidance. Last month, hitting a sweet $1.2 million milestone was beyond my wildest dreams. Hones. As soon as the author said inflation is ebbing, I lost interest. Inflation is not ebbing. The rate of inflation increasing is slowing. Two entirely different things. With the issuance of record debt, who's going to want to buy it without getting a premium? Rates certainly could go up, especially if inflation stalls out above the 2%. Fed is desperate to cut rates to help the flailing banks, and they will cut rates soon even as they telegraph they won't. First drop in the market will see rate cuts. Long bonds coming down 8 or 9% from their high is not what I would consider a dramatic recovery. Next news. Inflation data puts stock market rally to the test. What to know this week? Yahoo Finance. The latest reading of the Fed's preferred inflation measure will serve as the main highlight for investors in the week ahead. Below are your comments. This Thanksgiving, I got a whole new perspective on my financial journey. While I had a blast with all the fun stuff and chill time, I realized money worries didn't bug me before. I was just there, soaking it all in and loving every bit of it. Finally cracked the $1 million milestone with my eye. I'm sure they will find the best new way to calculate inflation to show it's slowing. Meanwhile, we got a notice that next year's health insurance cost will be going up another 5%. It went up 20% last year. 25% increase over a 2-year period. We need deflation, not slowing inflation. I wish It's a sad state of affairs in this country that people don't get the difference between disinflatio and deflation. Until inflation is negative, which it won't be anytime soon or ever, prices are never coming back. WN across the board. Oh, you might see a seasonal item have a drop in price here. The sun rose today, puts rally to the test. Snow fell today, puts rally to the test. Someone ate cereal for breakfast today, puts rally to the test. 1,000,001 reasons, puts rally to test. The Fed is not even close to taming inflation yet. Next news. U.S. economy doing better than national mood suggests. What to consider. USA Today. The economic outlook and the national mood aren't matching up as we head toward year's end. Inflation, interest rates are easing. But we're grumpy. Below are your comments. I'd be curious to know the total amount of money that consumers had in savings 3 years ago as oppos. Ed to today? Don't buy the rhetoric. Watch the bond market. If Papa Powell pauses again in December, something is broken. Other countries are already dropping rates, so the hammer is about to drop. Maybe just after the S&P magically gets to that 5,000 level? USA Today will be screaming. All we see are the prices at the grocery store and gas pump. Fuel prices up means food prices are up, taxes up, so farmers are being double hit. You have Chinese interest offering farmers more money that they can imagine for their land, many selling. We have a society dependent on these farmers. Supply chain woes ended early last year. This is pure corporate price gouging and nothing but. Gotta love that trickle down, right? Tax breaks for billionaires and corporations, but what did you get? Sure, not what the people out in the real world are saying. Most don't have money in the market. 401s are down 4% as people are borrowing from them as well. Food is still very costly. Credit card debt reaching new highs. Great times out here. Next news. Ask an advisor. I'm 63, have no retirement savings and will rely on Social Security. How do I begin saving? Is it too late to start investing, this late in the game? Smart Asset. I'm 63 and have zero retirement, just Social Security benefits. How can I begin saving? And where can I begin investing this late in the game? Rita, saving for retirement is certainly easier and has a greater impact on you. Continue reading. Right pointing arrow. The post. Ask an advisor. I'm 63, have no retirement savings and will rely on Social Security. How do I begin saving? Is it too late to start investing, this late in the game? Appeared first on Smart Asset blog. Below are your comments. Some of you people are very cruel. Not everyone is able to save throughout their work career. I was a single mother who got no child support from my 3 children's father. I could not begin saving until my mid to late 50s. My current husband and I try to save every penny we can now that we I wonder what she did for the previous 45 years to end up with no savings. I had a neighbor that always had new toys and took his family on extravagant vacations. Didn't have a dime saved at 47. I asked him what he was going to do about retirement, and his response was, "That's my kid's problem." My husband and I were able to retire early. One of the main reasons we were able to was because we had very little debt. Debt and slaves. Next news. How to calculate your retirement cost of living. Smart asset. When it comes to retirement, understanding the potential cost of living is important for effective financial planning. Without a clear idea of these costs, you can run the risk of outliving your savings or compromising your lifestyle. Here's what you need to know to calculate your retirement cost of living. A financial advisor can help. The post "How to Calculate Your Retirement Cost of Living" appeared first on Smart Reads by SmartAsset. Below are your comments. Some of the things listed most people will not need to include. Emo. People with only SS and savings may be able to avoid all taxes. Family support? That was for when one was working. Time for them to stand on their own 2 feet once you are retired. As for long-term care, just remember only 18% of. I take what's in my checking account on the first of the month. Then I add in my SS, which arrives later in the month. I take the amount that is in my checking account at the end of the month and subtract it from the ones of the month amount. The difference is my call. I retired last year. Keep a spreadsheet of all expenses and income on a monthly basis. Know exactly how much we spend and where the income comes from. It's not that hard to track. Gives me peace of mind. Next news. Tax Act versus TurboTax. Which can beef up your refund the most? Smart asset. As you prepare for tax day, you might be overwhelmed by the options available for filing your taxes online. You've probably heard of TaxAct and TurboTax, two of the most popular tax filing services on the market. But which is right? Continue reading. Right pointing arrow. The post TaxAct versus TurboTax appeared first on SmartAsset blog. Below are your comments. I use Quicken. It's supposed to integrate seamlessly with TurboTax. Instead, it introduces duplication errors into the tax form. 2 years in a row, I've had to go line by line to delete those duplications. I have been using TurboTax for many years. I use it for convenience. I can link my banks, brokerage, e-firms and other financial institutions to it. I also link to my past tax information. It would remember my leftover long-term tax losses. I can file tax in a very efficient. Your tax liability should be the same no matter what kind of software you use, whether you hire an accountant or do it yourself following the directions. I do mine manually myself and then use the IRS free fillable forms, and the bottom line is always the same. I've used TurboTax for years, and I'm pretty sick of it. Next news. Dow Jones Futures fall. Market rally looks great, but beware this. 8 stocks near buy points. Investors Business Daily. The market rally continues its strong November run, but a key fear gauge raises some concerns. Weight loss drug giant Novo Nordisk broke out Friday, leading stocks to watch. Below are your comments. If you're an investor diving into today's market, relying solely on trustworthy news is make or break. I learned this the hard way. It took a toll on my portfolio. That's when I turned to professional guidance. Last month, hitting a sweet $1.2 million milestone was beyond my wildest dreams. Hones just crossed the $1.5 million mark in my portfolio, and I can't help but think of Taylor's lyrics, "The bees. People in life are free. Investing wisely has given me such freedom." It's incredible how aligning with the right mindset and guidance can fast-track financial goals. I'm living proof that expert A. I use a stock advisor service and my own research for investing. Are stock advisors paid for recommending stocks? Yes. Beware of exchange-traded funds. They are quite different from another. The Financial Podcast. Dow Jones Futures. Market rally looks great, but beware this. 8 stocks near buy points. Next news. Low-risk investments perfect for retirees. Smart Asset. Understanding different safe investment options available to you during retirement, and the pros and cons of each, can help you make smart decisions about how to manage your money after you leave the workforce. Here are 5 common safe investments that can help you grow your wealth in retirement. A financial advisor can guide you. The post-popular low-risk investments for retirees appeared first on Smart Reads by Smart Asset. Below are your comments. With stocks, the dividend aristocrats and dividend kings have been around for a long time, so they are pretty stable as a rule. Be sure to check the dividend yield and start small. If you don't need the money right away, go for the dividend reinvestment plan. Remember to diversify. Diversify. D. Annuities never. Bonds EHH. Dividend stocks are good. Do your due diligence. These financial products provide tax-deferred growth. Only if you buy an annuity with a complex set of investments attached. If you want an annuity, and they can be very useful in funding your retirement, simply buy a SPIA, Single Premium Immediate Annuity, from a company that sells them. No finance. Annuities? Next news. Google leads 5 S&P 500 stocks near buy points. Investors Business Daily. Google leads this watchlist of 5 S&P 500 stocks near buy points as the market rally has investors seeing green. Below are your comments. Google would be a good one to buy one or more shares and keep buying the same number of shares if it drops below your basis. Even if we have a recession and it drops more, you can keep lowering your basis until recovery time. This is one of those strategies that only works in a market that acts like it can grow through the SKY. Maybe even to Mars. Be safe. Pigs get fat, and hogs get slaughtered. For those of you that have been fortunate to stay in the market to this point, income-yielding real estate looks good, Eve. This is why I'm up 300% YTD panic buying the 2022 lows when everyone was panic selling and screaming. Recession is right around the corner. It helps I also read charts better than experts and short the market during corrections and pull back KS and then ride it back up, compounding massively. Methinks CEO, comatose, Pichai remains the most serious impediment to the stock price. Next news. The Tesla Cybertruck is here. Investors hope for a halo effect. Barron's.com. Tesla, ticker TSLA, hosts its Cybertruck delivery extravaganza on November 30 in Austin, Texas. The event will be live-streamed on Tesla's website, and if history holds, on its YouTube channel. It also means investors can start answering two key questions. Will the Cybertruck be a big seller and, just as important, will the avant-garde truck help boost sales of other Tesla models? Below are your comments. Looks like a DeLorean that was in an accident. That is what pure propaganda looks like when you put wheels on it. What will insurance be on this truck? Stainless steel is hard to work with. Are they going to throw rocks at it this time? Spoiler alert, I am a Tesla fan, but I recently saw the Cybertruck, CT, in San Diego. In a word, it seemed enormous. This truck is stunning, but it will not appeal to the traditional pickup buyer, and neither will the IGH-priced legacy EV pickups. Next news. This legendary market forecaster has warned of a stock market crash and a recession for years. Here are Gary Schilling's 14 best ex-posts since the pandemic. Business Insider. Gary Schilling predicted stocks would keep crashing in March 2020, but he dismissed inflation fears a year later, and a recession hasn't materialized. Below are your comments. His big mistake was not realizing how much money is being printed in the background by the Fed, Trey Surrey and U.S. Gov. The Fed is still printing trillions with one hand for the banks with their myriad of programs like Ever's repo, where banks are bailed out with taxpayer money while talking tough. The veteran forecaster has been issuing dire predictions about markets and the economy for years. Lol. Yeah, and he's been continuously wrong, desperately hoping that he is eventually right. He correctly predicted in early March 2020 that the stock market would keep plummeting. Next news. Do 401k contributions reduce your AGI? Smart asset. When it comes to saving for retirement, 401k plans are a popular choice for many American workplaces. Contributing to a 401k not only helps you save for retirement but offers the added bonus of reducing your adjusted gross income and lowering your tax liability for the year. A financial advisor can help you determine how. The post "Do 401k contributions reduce your AGI?" appeared first on Smart Reads by Smart Asset. Below are your comments. Yes, but will eventually increase it too. And you, or those that inherit it, might be in a higher tax bracket when that happens. Every year I try to get the $14,000 reduction in AGI for me and wife. No matter the taxes in the future, I will be in a lower bracket then. Is this an actual question or it just for fourth graders? Me and my spouse get $30,000 off each $60,000 combined. That saves us more than $15,000 off taxes a year. This is Armature Hour. Next news. WSJ opinion. One Biden re-election promise. Taxes will go up. WSJ. His economic advisors have proposed myriad revenue raisers. Below are your comments. That's the problem with Democrats, they don't know how to run anything without ruining it. It's just like the concept of a nationwide surplus when cutting taxes, it works. They are so confused by it they literally avoid the conversation by throwing another topic of discuss. Scion at you. They literally. GDP, yearly average, D equals 3.50%, R equals 2.79%. Business investment, yearly average, D equals 6.6%, R equals 2.92%. Deficits, annual percentage of GDP, D equals 2.07%, R equals 3.04%. Unemployment, yearly average, D equals 5.59%, R equals 6.31%. Next news. What to expect in the markets next week. Investopedia. Coming up this week, the PCE inflation index, more tech and retail earnings, and consumer confidence. Below are your comments. Stock market has been crawling up and down ever since January 2021. Lately it increased just after Biden resumed spending. Just wait, see what happens when Biden's trillions run out. ! And all these public projects stop, are finished, and all the people hired by companies performing THSA projects are laid. Expect huge rally. Please subscribe to my channel. And if you like it, please thumbs up.